Okay, good evening, class. Welcome. I was using this opportunity to wait for other students to come in, but we can't waste too much time now. So let's get the ball rolling. Okay. All right. So today we'll be talking about one topic in taxation that's kind of the base for determining tax of an individual. We'll be discussing determination of residence. Determination of residence is our area of discussion tonight. Okay, before we start, we would like to lay down some ground rules. We will appreciate all participants. When you join in, please don't start your video. Starting your video is synonymous with standing in front of the class while the class is going on. We don't need to see the student. Okay. So I was in the middle of telling us the ground rules. One of the rules is we do not share our video. We do not put on our audio so that we will not distract the class. Then if you want to ask any question, use the chat forum to ask your question, okay? We shall be looking at what is called determination of residence. Determination of residence is our area of focus today, okay? Now, a taxpayer who is an individual, his tax authority is the state's internal board of revenue board. Now you may ask, which state is responsible for charging an individual tax? We all know that for a company, the tax goes directly to FRS, wherever your company is situated, whether it is in sorry, once again, I have to change position in my house so that I can get a good network. I don't know why network is throwing me off. Sorry. So we are talking about how can we determine the taxing authority that is qualified to tax an individual. Now, individual is based on what kind of income does he earn. If this person is earning salary, who is his taxing authority? If this person is earning income from his business, he's not a company, he's a sole proprietor or a partnership, where will it be taxed? What if it is only pension that he's earning? What if he collects rent, is having rent, is a landlord, and that is only what he does? What if he has a combination? What if he lives in different states? How will we tax them? So determination of residency is important. Now, who is a resident individual? A resident person or individual will fill one out of these three characteristics. One, he is domiciled in Nigeria. When we say domiciled in Nigeria, it means that he lives in Nigeria. He has a dwelling in Nigeria. He dwells in Nigeria. So that means when you see your form and they ask you your permanent place of residence, your permanent address, and you put a Nigerian address, it means you are saying you are domiciled in Nigeria. And that's one. The second one is, if you are not permanently based in Nigeria, that means you sojourn in Nigeria. You come and you go, you come and you go, you're not based. But during the time you are in Nigeria, all the days amounts to 183 days in the 12-month period. That means the 12-month period is a period from, let's say, January to December. Okay? So during that period, if your cumulative stay in Nigeria, where you earn income, is 183 days or more, that means you are a resident individual. Now, the third criteria is if you are a diplomat, ambassador, that means you must be an ambassador of Nigeria in another country. For example, the ambassador of Nigeria for the United States is a resident individual. Now, he is not in Nigeria, he is in the USA. A United States ambassador for Nigeria, even though he stays 4 years in Nigeria, as long as he's an ambassador of America for Nigeria, he is not a resident person. Why? This is because that embassy is seen as American territory. You know, when the Americans are doing their elections, the American embassies in all other states, in all other country, they'll be doing their election, they'll be coming to vote that period because they are American residents. They are diplomats. The same thing happens to Nigeria. When you are serving as a diplomatic agent of Nigeria, you don't have to be in Nigeria, you have to be in that country in which you are representing Nigeria in. Then you are a resident person in Nigeria. Okay? Now that we've gotten that definition, it means that a non-resident person is someone who is not domiciled in Nigeria. He is sojourning in Nigeria, but all the days his sojourn in Nigeria is not up to 183 days. And he's a diplomat of another country in Nigeria. So all the American Ghana embassies, their diplomats are not resident persons. Okay. Now, whether you are a resident or let's say you are a non-resident person in Nigeria, it means you are not liable to tax as long as you remain a non-resident person. Let's say, for example, someone who is an expatriate in Nigeria, let's say from China, he stays in Nigeria for maybe 170 days. that is the whole period he stays in Nigeria in one year, he will not be charged to tax in Nigeria. Okay, let's give another example. The Super Eagles coach, let's assume, it's an assumption, let's assume that he's from Germany, okay, and he stays in Nigeria coaching the Nigerian football team a total of maybe 180 days. You know, it's 3 days short of the 183 days. And that is the total in that 12-month period. He will not be charged to tax. That's the point. But now let's assume that 1 week or 1 month after he comes to Nigeria, he starts doing business. Okay? He starts carrying on a trade, or he starts carrying on a profession. Okay? Instead of the coaching job he's supposed to do, he's doing that. Yes, quite all right. Perhaps he's an accountant and he starts displaying his accounting skills and making money. Okay? It doesn't follow that because he stayed less than 183 days. No. That profession, that trade becomes taxable from the first day he starts carrying out the trade, irrespective of whether he is a resident or a non-resident. So take note, residency applies to somebody who is earning employment income. Applies to those who is earning employment income. But if you're not earning employment income, you're a sole trader, you are doing business, you become taxable in Nigeria when you start your business. But if you're earning salary, you become taxable in Nigeria the day you become resident. You meet one of these 3 criteria. Now let's look at residence and nationality. Residence and nationality. I used the example of our football coach. We are assuming that he is from Germany. Okay, that means he's a national of Germany. Now, we should not confuse residence with nationality. While that coach is a resident, is a national of Germany, he is a resident of Nigeria if he stays more than 183 days. And so it means that, another example, if maybe one of our Nigerian football player, let's use this person's name, although he may not be playing professionally again for Nigeria, let's use John Mikel Obi. He is, or he was, a professional footballer for Nigeria. Let's say he still is playing, and he lives in Russia. He is domiciled in Russia. Okay? The only time he comes to Nigeria is when he comes to spend Christmas and New Year with his family, or during the period when there is an international match of friendlies in Nigeria. He comes, trains, plays, and goes. And all the days he spent in Nigeria is 120 days. Okay? Though he is a Nigerian-born person, is a national of Nigeria, he is not a resident of Nigeria. So sometimes you hear Nigeria in the diaspora. These are not people who are domiciled in Nigeria. They are not residents, but they are Nigerians. So we should not confuse it. In taxation, Nigerian taxation, residence is what counts. So whether you are a foreign national or you're a Nigerian national, if you are a resident, you pay tax to Nigeria. Okay, now that we've got that sorted out, let's look at what we call place of residence. What is a place of residence. A place of residence is where is available for your domestic use. When we say domestic use, it means where you practically live. You stay there, you live there, you do everything, your domestic activity is being done there. That means you live there. So anywhere in Nigeria which is available for your domestic use on a relevant day. Now we are going to underline 3 things here. 1, domestic use. It means where you are living. Another word to underline is relevant day. We shall talk about relevant day very in a short while. Then another thing to underline is those places that do not qualify as your place of residence. So hotels, restroom, or anywhere you have a temporary lodging, it's not your place of residence. Okay, let's illustrate it this way. You are living in Abuja. Okay, no, let me use Lagos. You are living in Lagos, and for December, after your office has given you maybe 2 weeks leave to enjoy the holidays, you went to your village and you went there for that 2 weeks. And they ask you right there, where is your place of residence? What is your place of residence? You will simply say Lagos. You will not call your village as your place of residence. Why? Because you are having a temporary lodging at the village. If somebody asks you where's your address, you will not give the person your village address. You will give the person your Lagos address because that is your permanent lodging place. Somebody who is squatting with somebody for a short time is also living in a temporary lodging. So, except if you are squatting with the person for a long time, yes, then you can now use that person's place as your address. Okay, then that's a permanent place of residence. When we say a relevant day for an individual begins from January 1 because the tax year starts from January 1. So January 1 down to December 31st is a relevant day. And so any place that is available to you for your use, for your domestic use on a relevant day, as at January 1, where do you call your permanent place of residence? That is your place of residence. So if you have gone to the village for December, you have not relocated and you are there till January 1. That is not your place of residence because you still have to go back. So except maybe sometime during the year, you now relocate. When you relocate, you've changed your place of residence. Now, this brings us to what we call principal place of residence. Okay? Now, if an individual has 1 or 2 or more places of residence, then there's a problem. It means when they ask you, where is your place of residence? And you start doing like, do you mean my Lagos address or my Abuja address or my Port Harcourt address? Which one do you need? Then the next question would be, what is your principal place of residence? So you see, if you have more than 1 places of residence, then there is one that should be your principal place of residence. on a relevant day. So we're going to look at how we can determine principal place of residence. Because if we just say one place of residence, there will be no confusion. But now you have more than one places of residence, there's going to be confusion. So we need to know the principal place of residence. For an individual that has no income except pension, the principal place of residence is the place he stays the most. That is where they say he usually resides. So if you usually reside in a particular place, it means you stay there the most. So imagine somebody staying 7 months in Lagos, 3 months in Abuja, and then 2 months in Port Harcourt. The place that is staying the most or usually resides is obvious. Lagos, he stays there the most. So that would be his principal place of residence. So when he is asked for his place of residence, he should quote the principal place of residence. Okay? Now, for an individual who has a source of earned income, when we say earned income, it means income that you work hard. Before you get that income, you must work. Example of that sort of income is employment income, that's your salary, or your business income, maybe a sole proprietor, a partnership business. It means you must go to work. You must work. You're a professional. You must work, then you earn. That is your earned income. Okay? So if you have one of these aside pension, so that means pension is not in the picture. You are having something to do in Nigeria. Your principal place of residence for tax purpose is the place that is nearest to your place of work. After all, it is that business, the business income or the income from your salary that is being taxed. And so the place where your office is located, where you usually work, that is where is your principal place of residence. So let's look at it this way. You are living in Lagos. Let's say you are living in Lagos. Let me say you're living at Ikeja, Lagos, Alausa to be precise. And you are, or maybe Ikosi. Then you are working at, let's say, Mowe. That is where you go to work. And Mowe is Ogun State. And you say it's just about 1 hour or so you will get to your place of work, or yes, if there's traffic, 2 hours. You go there every day and you come. And your salary is being paid from Mowe, Ogun State. And you live in Lagos. Ladies and gentlemen, your principal place of residence is Mowe, because that is where you usually reside when you go to work. That is where is closest to your place of work. That is where your income is being generated and paid to you. So you don't pay your tax to Lagos, your tax is being paid to Ogun State. Okay? Now, the same thing with somebody who is a sole proprietor. You have your shop at Ogun State. The principal place of residence, Ogun State. The third one, an individual who has a source or sources of unearned income in Nigeria. Now, let me clarify that. We've talked about earned income, and we said earned income is salary, trade, income from trade or profession. Now, unearned income is an income that you will not need to work every day. All you need to do is just a one-time work and you keep earning. People call that type of income passive income. You even earn while sleeping. Example of that includes investment income. Okay, when I say investment income, if you like, you can say MMM. You can say put 100,000 to get 500,000 in the next 15 minutes. It's investment, is it? Okay, investment income. I'm not promoting that, but that is what some people think when we talk about investment income. But the one I want to give you as an example is dividend. You buy shares just once and you keep receiving your dividends every time. Or you give out a loan to a company and they are giving you interest every month, cumulative interest. They give you preference shares, loan notes, they give you interest. That is unearned income. Another one is royalty. Okay, let's say you're a musician and you've sang your song, or you're a movie actor. You've acted your movie and it's been sold. Each time they sell it, they give you a percentage called your royalty. That is unearned income. You don't have to act that movie over and over again for you to make the income. Or you are a landlord, you just build your house once, you rent it. People have stayed there for 10 years. You are receiving income. You are not working, just receiving income. These are sources of unearned income. So if you have one or more of this type, where will they tax you? Where is your principal place of residence? Once again, it is that place where you usually reside. So you've seen two things. If you're having pension and if you're having unearned income, you know where you usually reside is your principal place of residence. And we have also looked at if you have income that is earned income, business income, salary income, where that is closer to where you are earning this income, your place of work is your principal place of residence. Now, if you are an individual who works in an operational site of a company or any other body corporate, the place of which the branch office or operational site is situated is your principal place of residence. So it's not all about where the head office is. You work for a company, maybe you work for Coca-Cola company, and maybe the head office is in Lagos, and you are in a branch in Abuja. Okay, your principal place of residence for tax purpose will be in Abuja. All right. Now, what is the rules guiding the determination of residence? Which rule is guiding the determination of residence? An individual, whether in employment or whose only source of income are unearned income, is deemed to be resident for a year of assessment in the territory in which he has a place available for his domestic use in Nigeria on the first day of January of the assessment year. So you see now, first day of January become the first relevant year. So you are being taxed wherever you are deemed to be resident. Wherever you are deemed to be resident. Now, there's a difference between where you are resident and where you are deemed to be resident. Now, the difference is this. Let me use myself as an example. I am resident, okay, I am resident in Lagos. That is where my house is. Let's assume I am working at Ibadan or I'm working at Ogun State. Of course, my tax should be going to Ogun State. So for the purpose of tax, I am deemed, that's the word, I am deemed to be resident in Ogun State, even though I've put my address as Lagos. But because your office is Ogun State, you are deemed to be resident there. So this place is saying that whether you are in employment or you are having unearned income, wherever you are deemed to be resident, that is where takes your tax. And it goes to them on the first day of January of the assessment year. So it means that, one, if you are resident in Lagos, or you are deemed to be resident in Lagos, okay, let's say you are deemed to be resident in Ogun State and you are receiving your salary in Ogun State. Then maybe in July, you were not posted to Abuja, and you now relocated to Abuja. Okay, from July to December, normally you're supposed to be deemed to be resident in Abuja. But because on the first relevant day of the year, January, you were deemed to be resident in Ogun State, the whole of that year, your tax will go to Ogun State. And now, the 1st of January of the new year, wherever you have relocated to, you are deemed to be resident there on that day. Now, that is your first relevant day. So you see, that relevant day is coming into play. So we get to understand it that you are taxable from January 1. So wherever you call your address, wherever you call where you work, that is where you will be deemed to be resident for tax purpose. All right, an executor. Who is an executor? An executor is someone who executes a will, perhaps a lawyer who writes or who witnesses or attests to a will by a settlor, somebody who created a trust. I have to be using the language of taxation because I will still teach you settlement, trust, and estate. Okay, so somebody who is an executor or a trustee is deemed to be resident in the territory where the deceased individual, now that deceased individual is like his principal. He is an agent to that principal. So where that individual who dies was last deemed to be resident, that is where the executor will be deemed to be resident as long as he is enforcing the will. Let me give you an example. Let's say Mr. XYZ, okay, was deemed to be resident in Lagos, but maybe he died in Abuja and they have been selling his properties in Port Harcourt. Okay, now that is where the income is coming from. But the individual who dies is seen to be resident in Lagos. And so the executor of his will be deemed to be resident in Lagos, as long as he is enforcing his will. Now, a trustee is somebody who is an arbiter, who is holding something in trust for someone. It's also connected to an executor and the principal. The trustee is also a principal, an agent to a principal. So where all the income from a settlement or an estate arises, now that is where the trustee is deemed to be resident. Otherwise, if the income is not arising from one place, when it is cannot be determined where the income is arising from, then the FROS becomes the taxing authority. Now, when we go to partnership, people who are partners are deemed to be residents where the principal office or the place of the partnership is situated on the first day of that year, or is first situated during the year. Okay, now let's say, for example, let me call partner's name now. Let's say Smith, Mariam, and Kindness are all partners. And let's say Smith stays in Lagos, Kindness perhaps stays at Imo State, and Miriam perhaps stays in Abuja. And their office is in Lagos. All these other people that are not in Lagos are deemed to be resident in Lagos in any year of assessment. Okay, let's say they establish the partnership in August 2018. So by virtue of the fact that they established their partnership August 2018, that is the first relevant year for the first relevant day for the partnership. And so that is when the partnership office is first established. So two things, it's either on the first day it is being established, if it's a new one, or if it is an ongoing one, on the first day of the year. Wherever you feel as your office on the first day of the year, that is where you are situated. So you see, in tax, when you want to file tax, they will ask you for your registered address, your office address. You have to fill your office address, okay? If you are changing your address, every year you keep filing annual returns, you change your address. Okay, with CAC will want to know what is your new address. Is it the same as the registered address? Because there's what they call registered address, and there's what they call business address. Your business address and your registered address could be the same thing the first time you are registering it. Maybe after 5 years, you've moved out. Your registered address will never change. Your registered address will never change. That is where you give them when you first register. But your business address can change as long as you move. So what is important is the business address. When you move, then you have to fill the tax office of where you have moved to. So wherever you put as your place of partnership, that is where you are deemed as resident. A village or indigenous community is deemed to be resident in the territory that they are found. Then an itinerant worker. Who is an itinerant worker? An itinerant worker is someone who has no particular place where he stays. He can be found anywhere. He can be found anywhere. He can be transferred anywhere. So wherever he is found in the year, that is where his place of residence is deemed to be. The members of the armed forces, one of the reasons why the FROS is taking over their residency is because they are like an itinerant worker. They can be transferred anywhere. And so in order not to create confusion as to their principal place of residence, they are exempted. And so their tax is being taxed by the Federal Inland Revenue. All right. So let's go further. The meaning of income. What is income? Income chargeable to tax is the aggregate amount. When we say aggregate amount, is the gross income. That is what we mean. Gross income of all the income from all sources inside or outside Nigeria. So we say income from all sources. When we say from all sources, it could be earned income. Earned income could be income from trade, or you are doing business. Yes, that's trade. You are doing a profession or vocation. All the income you get from trade, that is part of the source of income. Okay. It also means if you are having salary or you are having employment income, you earn salary or you earn wages as a contract staff, or as a vendor, you are paid fees, or you are paid allowance, or you are given productivity bonus, compensation, gratuity, pension, premiums, allowances, benefits in kinds, every other thing that you receive from your employment, other than those that are specifically stated as non-taxable. For example, specifically, gratuity is exempted from taxation, so you don't include it. Pension is also excluded from taxation. Okay? It also includes whether you are getting income from rent, income from dividends, royalty. All these are income. As long as you do small work and you get something. It doesn't include gifts. If you are getting pocket money from your parents, it doesn't amount to income. Okay? Or if you are giving an errand, somebody send you an errand and give you money and they paid it to your account, and perhaps you have small change in it, it is not an income. Okay? Or you take a loan, that loan is not an income because you are going to pay back even with interest. These are not income. Now, income can be divided into two types. We have what we call the earned income. I mentioned before that earned income are income that you have to work for it before you get paid. Salaries, profit from business, wages, compensation, bonuses, commission. All these are earned income. And we said your place of residence for someone who enjoys earned income, apart from pension, apart from pension, is anywhere you are deemed to be resident for that year from the 1st of January. Okay, so it means wherever your principal office is, where you are deriving that income that is being paid to you, that is where you are deemed to be resident. Okay, now whenever you are earning pension, now you don't have any office anymore. The only thing you earn is pension. So we will now look at where you are living, which place you usually live. That is your place of residence. Your unearned income, we said before, are those income you get from not doing work every time, rental income, dividend income, royalty. Mind you, all of these income, you are going to be reporting them as gross. As gross. Okay, patent rights and all that. So things like gifts, inheritance, and bequeathals. When we talk about gifts, it's not like pocket money. Okay, anyway, pocket money are unearned income anyway, but these are not taxable because pocket money is not given to somebody who is a taxable person. But when you get gifts, for example, somebody gives you land or gives you car, is tangible gifts. Inheritance, these are another high level of gifts. These are unearned income. Okay, so wherever you usually reside, where you have your principal place of residence from January 1 of that year becomes your place of residence. I said before, you have to get your gross income for you to be charged for tax. Now, how do you get your gross income? It's easy. For employment, your gross income, your gross profit or your gross salary is your gross income. For your business, your gross profit is your gross income. Okay, your gross profit. Okay, so not net profit, gross profit. Now for your dividends and interest, normally you are being paid net of withholding tax. You are being paid net of withholding tax. Okay, let me give an example. Let's say you have received a dividend of 90,000. 90,000 means that is the net of the dividends that you've just received. It means that 10%, which is the withholding tax, has been deducted. What you just received was 90% of the gross. So there will be a need for you to gross up that income. You receive 90,000, but that's net. So how do you gross it up? For dividends, rental income, or royalty, or interest that have 10%, you gross them up by dividing by 0.9. You gross them up by dividing by 0.9. Divided by 0.9 simply means you multiply by 100 and divide by 90. 100 over 90. That is what it means. That is how you gross it up. Okay? So, resolving disputes over residence rule application. Where the territory of residence of an individual for a year of assessment may be determined under more than one preceding circumstances, it shall be determined by the first determined circumstances applicable. Now, what does it mean? It means that if you have several circumstances affecting you in a year, that your place of residence would have changed. Let's say, for example, you used to work in Abuja on the first day of January, though you were in Lagos, but your office is in Abuja. So that first day of January, your address was still Abuja. Then, let's say by February 1, you finally relocated to Lagos and you got a job and your office moved to Lagos. So they start paying you from Lagos office. So one would think that, okay, which is his principal place of residence? So here he's saying that if there are more than one preceding circumstances, they will have to look at which circumstance came first. That is what will be used in determining your place of residence. So if the first one is where was your principal place of residence as at January 1? If you can answer that question, that means you have determined what will be your principal place of residence for that year. If by reason of number A above, a determination of residence of an individual for a year of assessment fails to be revised by a tax authority other than that of the territory in which the individual is finally determined to be resident for that year, it shall discharge any assessment made by it on the income of the individual for that year. Okay, when a dispute arises between two or more tax authorities or between the tax authority and an individual with respect to residence of an individual for a year of assessment, the aggrieved parties shall set out all the grounds on which he relies to refute that determination. And you have to refer those grounds to the Joint Tax Board. We'll talk about more of this aggrieving when we talk about, what do they call that? Appeal and objection procedures. Okay? Now, I want to tell you something. Look at this dispute that occurred during the Big Brother Nigeria. When they say Leko, who won the Big Brother Nigeria, I think I heard that they were saying Lagos State will collect its tax, or is it from Ogun State that will collect its tax? You know, there's going to be a dispute. So how will you resolve this dispute? The only way to resolve this dispute is this: where is Leko living? Perhaps he lives in Ogun State. Another question is, where is he deriving this income? Is he deriving it from Ogun State? Maybe perhaps his place where he resides is at Ogun State as of January 1. Then, where did he receive the income? It's in Lagos. Some might argue that this rule applies to somebody who is earning a salary, and that Leko was not earning a salary, and that this is a kind of unearned income. Some could say no, it's not an unearned income. Some could even say, okay, there's a betting, this is a income from betting and all that. This is like casino. There are some things that people will bring as grounds to say, no, the way you determine my tax authority is not so. And so there will be a dispute. So there will be an appropriate way you can sort out that dispute. Like we said, which of the circumstances first is the preceding, the one that first precedes? Okay? Which one of them will hold more ground? If you look at it this way, is it that because his place of residence as a January 1 is perhaps Ogun State? Or is it that because where he's making the income is Lagos? So you see, there's going to be disputes when it comes to place of residence. So we need to be very careful when we talk about residence. I have to exercise for you before we call it a day on this topic. The first exercise, all right, I want you to give me your answer in the chat room. I'll read the question. Mr. Alex Sanchez was employed by Xenox Limited as Director, Commercial West and Central Africa with effect from 1st March 2011. He entered Nigeria on the date of his employment, became effective, and remained in Nigeria till 25th August 2011. He returned to Nigeria on 15 January 2012 and remained in Nigeria till 31st July 2012. Explain the basis for the taxation of the income earned by Mr. Alex Sanchez in Nigeria for the relevant years. Okay, We may do it together, but I'll give you 1 minute to think about it. Just give me a moment. Use that 1 minute to think about it, and let me hear your answer before I provide mine. Okay, I can see no answer here. So let's do it together. We said Mr. Alex Sanchez was employed. Underline the word employed. It means he's earning employment income. And so where will be his principal place of residence? Wherever his office is. Now, as a director, commercial West and Central Africa, with effect from March 1, 2011. March 1, 2011 becomes relevant to Mr. Alex Sanchez because that is the day he entered into Nigeria. That is also the date of his employment. Now, that would mean that because Mr. Alex Sanchez was not in Nigeria before, we have to wait until Mr. Alex Sanchez becomes a resident in Nigeria before he can be charged to tax. He becomes resident in Nigeria whenever he stays up to 183 days between January 1 or between that March 1, which is relevant to him, or down to December 31st, because the year of assessment is 12 months, January 1 to December. So let's look at it. Now, I have to tell you too that the year of assessment for unemployment income is actual year basis. So that means there's a difference between what they call preceding year basis and actual year basis. Actual year basis is the actual year in which you are getting your income. That is also the year you are being taxed. So March to December, how many days did he spend? Let's look at it. March has how many days? March has 31 days. So from March 1 to March 31 is 31 days. Then April has 30 days, so add 30 to it. You have 61. May has 31 days, add 31 to it. June has 30 days, add 30 to it. July has 31 days. If you add 31 to it, so up to July 31st, you have 153 days. Now, August, he stayed till August 25. So add 25 to that, you have 178 days. Then check, he didn't return to Nigeria until 2012. So it means for 2011, he stayed for 178 days. For that year, he is not going to be taxed in Nigeria because he is not a resident of Nigeria. Now let's look at 2012. He returned on January 15, 2012. So that means January 15 to January 31st. How many days is that? From January 15 to January 31st, how many days is that? Look at what you will do. 31 days in January, minus 14 days that he was not in Nigeria, because January 1 to January 14, he was not in Nigeria. So 31 minus 14 will give you 17 days he was in Nigeria. So January 15 to January 31 is 17 days. Now add February 28 days. You have now 45 days. Then add March 31 days. Add April 30 days. Add May 31 days. Add June 30 days. Add July 31 days. You have 198 days. That means he is resident in Nigeria for 2012. He spent 198 days in Nigeria in 2012. On what date did he become resident? The day he clocked 183 days. So now we have up to July 31st as 198 days. So what do? If you want to know the date he became resident, remove 183 from 198. It means he is 15 days a resident. That means for 15 days, he has been. Day was day one of his residency. All you need to do is 31, July is 31 days, minus 15 days. It means his residency started, okay, that's from July 16. That is when his residency, that is when he stopped becoming non-taxable. So from July 17, his residence started. So from July 17, he became a resident and is charged to tax. So all what he has earned from January to July starts being taxed. Assuming he left before July 17, let's say he left July 16, he will not be charged to tax. Okay, so that's it. The next one, Mr. Abbas works with the Federal Ministry of Works, Abuja. He lives in a self-contained flat in Gwagwalada and travels every weekend to see his first wife and children in Kaduna. He also visits, stays with his second wife and children in Nyanya, Nasarawa State, on Thursdays and Fridays of every week. Determine the tax authority to which Mr. Abbas will be liable to tax in the year of assessment. So look at it now. You can say that Mr. Abbas has several places of residence. He lives in a self-contained in Gwagwalada, that is in Abuja, okay? But look at it. Every week, he sees his first wife in Kaduna. Kaduna is in another state. Every weekend, that means Saturday and Sunday, 2 days, he is with his first wife. He also visits and stays with his second wife and children in Nyanya, Nasarawa State, on Thursdays and Fridays. That means another 2 days out of 7 days. So 4 days out of 7 days, he is not staying in Abuja. Either he's in Kaduna or he's in Nasarawa. That means 4 days he's out, 3 days he lives in Abuja. Will you say because he stays in Abuja 3 days that his principal place of residence in Abuja? Will you say because that is where he usually resides, that is where his place of residence is deemed to be? Of course, no. If he was not working, that would have made sense. that would have said yes, that would be the determinant. But now he is working. The place says he works with the Federal Ministry of Works in Abuja. That's employment income. So his tax authority will be where his office is, Abuja. So Abuja is where he is deemed to be resident. Okay? All right, so as a form of review, we have seen what is residence and the importance of residence over nationality as the basis for taxation. We've looked at principal place of residence and rules that will determine how an individual is being seen to be resident to a place with reference to his income. And we have seen how to resolve disputes that arise from place of residence. Okay? If you have any question, feel free to ask later today or perhaps tomorrow. I will send you your notes so that you will have no fear, your notes will come. So I will send this particular note for you so that you can take down some points. Feel free to look at past question papers and solve some of these things, because in your exam, residency may come as an objective question, it may also come as an essay question. Okay, if you have any question later, feel free to ask in the chat room, in the WhatsApp group where you were added. Okay, I'll be taking a bow now for the class. I have another class by 9 o'clock. I need to freshen up for that class. So thank you so much for bearing with me. Thank you so much for making our first taxation class to be a memorable one. We hope to learn more as the days progress. We assure you that before your exam, you will be well equipped to write this exam. So if you have any question, feel free to ask in the chat room. Okay, I can see somebody just send a message. Okay, thank you so much, Smith. Thank you so much. All right, I appreciate all your accolades. So thank you so much. I want to take a bow now. See you in the next class.